Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Stephen Lubka, Head of Private Clients at Swan Bitcoin, Matt Ballensweig, Managing Director at BitGo, and Austin Alexander, co-founder of LayerTwo Labs. They join me to discuss the short and long-term impacts of the Bitcoin halving and why it is a critical part of Bitcoin's programmatic monetary system. Gentlemen, it's great to have you back as always. Thanks for joining us to give us the follow-through from what we've seen with the Bitcoin halving. Matt, I'd like to kick it off with you. Halving really isn't just about the price at where Bitcoin is. There are short and long-term patterns associated with this.
Yeah, that's right. Thanks for having us on, Jill. Always a pleasure to see you. I think that's right. In terms of thinking through, the halving and what the implications are on the broader market. Obviously, there's people always think about price, but I think you need to think about these things in really two lenses. There's the short-term immediate impact, and then there's the long-term what happens. In the short term, the halving tends to be pretty muted. If you think about just the math here, there are now 3.125 Bitcoin mined every block less than before the halving, and so that's about 450 Bitcoin per day, which on a daily basis is not enough to really impact pricing and liquidity in the market, and shouldn't have really a huge impact on the immediate price action. And even with that, right, miners actually might need to make up for the fact that they're earning less revenue per block now. And so they might even be selling some of their existing inventory and working capital on the market to generate some excess cash in the short term. So short term, my guess here is this is actually probably somewhat of a nothing burger, a little muted, maybe a sell the news event. Now, that being said, when you think about this long term, right, 450 Bitcoin per day turns into roughly 165,000 BTC per year. That's $12 billion or so of net less supply on the market. And when you think about that relative to the new demand that we've just seen from the 9 new ETFs that launched earlier this year, that's $25 billion at a minimum pressure on price over that period of time. And that's not accounting for new demand. So I do think long term, you're going to see some meaningful price appreciation of Bitcoin post halving. And if you just look at history, right, over a 1 month period following the three previous halvings in 2012, 2016, and 2020, Bitcoin's only moved 9%, down 10%, plus 6% in each of those periods. But then if you zoom out and you look at the following 12-month periods after the three last halvings, in 2012, Bitcoin appreciated 8,800% in 2012, 285% in 2016, and 548% over the year after the 2020 halving. So it just shows the kind of spectrum between short-term markets and long-term markets.
Yeah.
I'm sorry, go ahead. Awesome.
So I definitely agree with Matt there. This is much more of a mid to long-term impact. The numbers work out to, he did a great job highlighting those, but it's about $30 million a day at current prices that is not being sold per day. So over 1 day, 2 day, a week, it's not really that big of a deal. But over a month, like he was highlighting, a month is $1 billion, a year is $12 billion. If you had a new buyer who they were guaranteed to do what they said, and they came out to the market today and said, hey, we're going to buy $1 million every month for the next 4 years. You'd be pretty bullish, right? That this buyer, and that's effectively what we see with the halving over this long run. So the effect definitely plays out there. And that's what I like to call the mechanical impact of the halving. So what the code actually does is that supply issuance reduction. However, there's this other kind of more socially mediated impact, which is that everyone likes to report on the halving, as evidenced by we're here having this conversation right now, and there's been a lot of these conversations being had. And so what does that do? It puts Bitcoin in front of a lot of new people. Now, what is the fundamental driver of price in any asset, not just Bitcoin? The fundamental driver of price is people clicking the buy button. Like, period. That's the only thing that moves asset prices. Models don't move asset prices. Cash flows don't move asset prices. People buying assets because of those things moves asset prices. And so with the halving, you have this secondary impact where it's like Bitcoin's built-in marketing. And a lot of people see it. They learn more about Bitcoin. We get millions of new users. And that is bullish for price. So you have this kind of guaranteed mechanical impact, and then you have this reflexive social layer.
Right. And Austin, what about the impact of the ETFs that have come out, especially, this year, now that we have a spot Bitcoin ETF in the US and we're continuing to see institutional adoption, that variable wasn't around the prior three halvings. Do you think that's gonna, that variable is gonna mean anything in the longer term?
Yeah, I'm sure it's going to mean something in the longer term. I'd just like to say, very well articulated description of the halving and the effects by Matt and Steven. Uh, yeah, I mean, it really opens up this asset to a new market. That indifferent average investor that see prior to this, to acquire Bitcoin, you had to go to a specific exchange like Swan or Kraken, and there were just even if there were very slight barriers to entry, uh, it presents some friction for the average, somewhat interested but perhaps indifferent investor. And with the ETF, it's one button to click in the platform where there likely have been clicking buttons for the last 20 years since online trading began. So I would say the effect is probably going to help amplify the upside, but maybe in the long, maybe when the market corrects, we might see some amplification of the downside. I guess that remains to be seen. And then recently we've heard news of a new ETF in Hong Kong that's going to begin trading at the end of this year, and obviously all these things I said about friction for that average consumer in the US are even more amplified in the East. Hopefully, maybe someday there'll be some there's vehicles that exist. We haven't yet heard if the Hong Kong ETF will be one of these for mainland China broker customers to access that asset as well.
Yeah, it seems to be as if Hong Kong is the proxy for mainland China at this point.
Yeah, and the interest out of I've been in Hong Kong a couple times in the last few months. The interest in this current Bitcoin narrative, the Bitcoin Layer 2 narrative, and these new protocols being built on Bitcoin, I would say it's about 10 times higher than it is in the West. Although the West is starting to catch up now, and you're starting to see Western VCs looking to get into this. But I'd say for this particular cycle, what's happening right now, Hong Kong is, and I assume Asia in general is kind of leading the charge currently.
Yeah, and I think the relationship between the ETFs and the halving is kind of an interesting one, because we're in this scenario where we've had on net, the ETFs as a complex have pretty much mostly been buyers. There's a few days, but I mean, if you factor GBTC out of that, they've pretty much always been net buyers. I'm sure that'll change at some point on some days, but the trend seems to suggest that on average, they buy more coins than they sell. And so you have this kind of consistent increase in buy volume, which only get ramped up when there is a catalyst or there is some sort of spark that causes traditional investors to want to own more Bitcoin. And then it's meeting this kind of this issuance reduction. And my basic view of markets is that's not additive, it's multiplicative, right? When you have an increase in buy pressure at the same time you have a decrease in sell pressure, it's not 1 + 1 = 2, it's 1 + 1 = 4. There's kind of a added effect that comes there. And so I think seeing the ETFs at the same time that we have the halving this year, it wouldn't surprise me at all to see an outsized impact relative to the past.
Right.
Yeah, and I would add to that too, just to say that anecdotally, what's as I'd say interesting as the flows themselves is really the quality of conversations. I think at least BitGo's having now with institutional interested parties that just were not at the table prior to the kind of issuance of the new ETF. So we're talking to some of the largest sovereign wealth managers in the world. We're talking to endowments. We're talking to now a whole new universe on the investment advisor side of the institutional community. So when you think about the total addressable market of these kinds of investors, the forecasted potential inflow is just massive into the asset class. So it's super encouraging to now see a lot of market participants having conversations with us on the ground that just were not here in the last 2 years.
Matt, what about the
100%.
miners though? Because isn't this going to impact the calculus of their model?
Yeah, so from a miner's perspective, I think again you kind of look at this again short term and long term. So what tends to happen here is almost this like Darwinian effect on the ecosystem, right? You have some of the smaller miners that have the outdated equipment, that weren't as profitable, and now when you have this reduction in revenue, it puts stress on their operating model, and so they're forced to try and weather that storm, hope that BTC price appreciates over time such that the revenue catches up to their cost structure. But in a lot of cases, it doesn't go that way, and so a lot of the smaller miners either actually take their equipment offline and stop mining, or they get acquired by some of the bigger players out there. So typically after a halving, you see a lot of consolidation and M&A activity in the sector. Some of the bigger public companies and bigger miners out there that have these state-of-the-art fleets, that have access to capital and financing arrangements with lenders, they take advantage of the situation. I think their immediate revenue gets hit, but they've kind of bolstered their balance sheet to the point where they can sustain this event and now actually capitalize on it by accumulating some smaller shops or updating their fleets and just kind of preparing for the next cycle all over again. So, I think you'll start to see that similar trend play out here in terms of just consolidation. But in the short term, you will see some stress on some of the smaller miners.
I think also it's important for people in this market to understand that, the 21 million coin limit is probably like the fundamental value proposition of Bitcoin. And so, we need the issuance to stop eventually, and that's the halving is kind of the mechanism to trail off the issuance of new Bitcoin. However, as that mining, what we call the mining subsidy, decreases, gets cut in half every 4 years, the network relies on transaction fees ultimately to fund the miners to keep moving the chain forward. And so in the long term, maybe not, we're only the fourth halving in out of, I think it's 34. So there's 100 years left of halvings, but we're very near to, I forget, something like 95% of all coins being issued. And so it's important to note that the network is in short order going to become much more reliant on utilization transaction fees to fund the miners to push the chain forward. However, we've seen in the days following this halving in particular an absolute explosion in transaction fees fueled by people kind of experimenting with novel uses of the blockchain. This particular experimentation around NFTs and ordinals on Bitcoin, maybe it doesn't have staying power, but we definitely need to, as an industry and as investors in this asset class, discuss ways to scale Bitcoin so that we can aggregate much more transaction volume onto the chain. I'm super bullish for, a decade plus, completely 100% all in bullish, like a crazy person. However, I think, if we don't scale, we don't do something to scale Bitcoin. I mean, to Bitcoin status quo today, without any further scaling modifications, of course, it's worth a few million a coin. The value proposition seems crystal clear to me. However, we want Bitcoin to fulfill its ultimate potential as being the kind of foundational network for all transactions in the entire global economy. We need some sort of scaling that I believe aggregates in a decentralized, dynamic way, and not just to scale through custodians. Although it's, Bitcoin.
Right. And that's a perfect segue, Stephen, for a question that I want to bring up with you. It seems to be there's these discernible moments, such as we see institutional adopting, then we see ETFs becoming available in the US via a spot product. There seems to be these very discernible moments, like halving as an example. So not suggesting digital assets or anything like equities or commodities, but at least with equities, there's earnings every quarter, and there are events that change the fundamentals of a stock, right? So what's going to be next? Like it's not like you have earnings every quarter for Bitcoin. So, piggybacking on what Austin said, how is this going to continue to grow outside of product innovation, outside of having events?
Yeah, that's a great question. I think it's one that many people, before they kind of get into the industry or get into the asset class, I think it's one of the top questions of like, well, how do you value this thing? What gives it value? It doesn't have cash flows. It's not a company. And it's a very valid question. I mean, ultimately, Bitcoin's price right now is driven by adoption. It's driven by people seeing value in what it gives them. Now, the main function it serves right now is as a store of value or as a savings technology. And so people might see that as like, oh, well, that's not really utility. Like, that's not a use case. But I mean, that is a use case, right? Like, if you live in a country where if you sell a piece of property and your only option is to hold it in their currency or their stock market, and this is an inflationary economy with a weak stock market, and like, let's be clear, like the US stock market has been the best performing stock market in the world for a long time, and literally everything else has performed worse than it substantially. You have a savings problem, and having a vehicle in a medium where both you can save value and also that value is not prone to confiscation, it's not prone to certain risks, you can transact with that value globally. Well, that is something a lot of people find utility in. So that is a use case. And that is something that year after year, globally, more people choose to use Bitcoin to store part of their wealth. And the more people that do that, the more Bitcoin is worth. In the same way you might value gold, right? Like gold does not have cash flows, but gold is worth trillions of dollars. Why is gold worth trillions of dollars? It's not the industrial use cases. It's not jewelry. If that's all gold had, it would be a 90% lower valuation than where it's at. It has value because globally humans use it to store monetary savings. And Bitcoin is a novel, and I would even say a revolutionary breakthrough in the ability to do that. Now, will other things happen? Will people use it as a payment network? Will people use it to build other technologies? I'm sure these are things that happen, right? And those things reinforce Bitcoin's value proposition, but it has a very strong value proposition independent of those forces.
Okay. And Matt, a couple
Yeah.
minutes here. We'll give you the last word.
Yeah, I would 100% agree with Steve's interpretation there. I think the value of Bitcoin lays in the public's perception of what it can be. And Steve did a great job kind of laying out, right, the fundamental value proposition of Bitcoin, and that it's a non-sovereign storehold of wealth that is an internet-based asset and is fully decentralized. That's just something we've never had as a society. And I think, what are going to be the near-term catalysts, right? If there's no earnings and there's no, it's not like there's another halving, happening in the next few months. So I think the catalysts just stem from that adoption curve really compounding and escalating as people understand and are educated about the value prop of Bitcoin, that they will then be able to empower and educate more people. So you're going to see this exponential understanding, and interpretation of Bitcoin and what it actually means, I think, globally. And then if you just look at kind of what's happened now in the last few months with the new issuance of the 9 new ETFs, we're getting ambassadors, whether it's Larry Fink or Abigail Johnson from BlackRock and Fidelity, speaking about the same things that Steve and I are speaking about right now. And so the more educated and empowered people really spreading kind of the gospel of Bitcoin, I think that is what will lead to its full potential, price appreciation, and those are going to be the catalysts. And then when you get these big investments, investment advisors or hedge funds or endowments or sovereigns actually adding Bitcoin to their portfolios and going on the record and saying, we're actually owning this as an asset class in an institutional portfolio, that will be like a chain of dominoes. And it'll go from one pension or endowment to the next. So I think those are going to be the things that actually take this to the next level over the next few years.
And let's be clear, just one detail to add. The ETF story is less than 5% done. Like it has not played out. They have not fully deployed their marketing budgets. They have not completed all the conversations they've had. They have not completed their addition of these ETFs to other portfolios and other products that Fidelity and BlackRock serve. Most financial firms, like you still can't buy the ETFs there. They're still rolling them out. They're in non-solicitation clauses. Advisors can't talk about it. You can't own it in an advisory account. Like the story is not done. Like what is the next catalyst? It's the ETFs. It's still the ETFs. Like this has not played out yet.
Yeah. All right. Austin, 30 seconds. I promise 30 seconds. At the end of the day, it sounds like scale, just like any other way you look at fundamentals for a company, a digital asset and so forth. It comes down to scale.
Yeah, and Bitcoin obviously is of any digital asset is by far the largest scale. And it's crystal clear now that capital of all sorts, all over the world, of all types, is intrigued at the very least. It's still almost surreal to know that there is a sovereign state where Bitcoin is legal tender. They're probably a decade too early, let's say, but the writing's on the wall. Bitcoin is going to be held by everybody everywhere, all pools of capital, sovereigns all over the world, pension funds all over the world. Everybody will need to own Bitcoin. It is inevitable. It's coming, and we have many orders of magnitude to go.
All right, gentlemen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.